Up 3:04 server time. We've just had the Canadian jobs data, much better than expected. I don't know if I can share my calendar. I could share my calendar if I've got it open. I haven't actually got it open, so just bear with me a second. There we are. Let me just minimize me. There we are. So much stronger than expected. The key number is this one here, the net change in employment, up 150,000. Last month it was 112,000. It's been upgraded from 104,000. Expected to dip, and it's been a blockbuster number. Unemployment's also come down, and there's more Canadians involved in work than there was last month, and a significant increase. So good data for the Canadians. Remember, the Canadian Central Bank was the first to start talking about we've reached our limit, we're going to cool, and chatter that they may be raising rates by the end of the year. Obviously, it's that conversation continues to hold markets in awe. So let's just run through the calendar for what's going on today, later on today. In about half an hour, we've got the chief economist of the Bank of England, Mr. Pill. He's very much on the hawkish side of things. There's a big split in the Bank of England, the MPC. Remember, we had that split vote. Two members are not wanting to raise rates. Some are talking about it's the wrong thing to do, not only keep things as they are, but possibly cut rates. So possibly 3-4-way split on the Bank of England next time. But anyway, Mr. Pill isn't there. He's one of the hawks on the Bank of England. So see what he's got to say later. Schnabel, the deputy vice chair of the vice president of the ECB, also at 4 o'clock. And then we got the University of Michigan, the UOM, consumer sentiment and inflation expectations at 5 o'clock server time. And then we got two more hawkish members, or hawkish comments is what's expected from both Mr. Waller and Mr. Harker later on today as well. So big hawkish tilt for well, not big hawkish tilt, but it's been that way for a while, hasn't it, from the bank. So good afternoon, everyone, or good evening, good morning, wherever you are in the world. These sessions are for you. So whatever you want to have a look at, put your time on. As I say, I've just started with a dollar CAD here on the 5-minute chart. See what a big down leg we've had in that number. Interestingly, we went to yesterday's low here to around about 130. We can't see that, can you? 133.73. Let me just change the color of that. I've been on a different background. Make them dark blue for today with that white background. So we tested yesterday's low, 133.71.16. We went under that on that immediate announcement. We bounced a wee bit. 133.80 is where dollar CAD trades at the moment. Certainly that's the mover of the moment. All that very strong Canadian data. Euro currently under the key 107 handle. Again, it's not on this line. Let's put it on here. Under the key 107 level. There we are. And we'll see where we go. Let me just put that in there. There's no doubt people will be talking about euro as we go through the day. Where's that 107? Let's put that in as 1.07. Okay, so dollar tilting up, euro down today. So let's have a look who's got wants to have a chat. Hassan, good afternoon. Hope you're well. Can you break down natural gas? We don't offer natural gas at the moment, Werner, but I'll certainly come back to that. Obviously, one of the big reasons Europe potentially isn't going to go into recession, and we had some surprisingly strong data out of the UK earlier on today as well, is the combined with the mild winter thus far, although we are still in the middle of February and anything could happen. But we're through the bulk of it, many are arguing, and hence the natural gas prices have been one of the key drivers of inflation or expected inflation. That's not happened, so it's cooled quite quickly. So unfortunately, we don't offer that as a trading product, Werner, so I don't really spend much time on it. When will I win a prize? Just keep trying, Emma. Keep trying. Check gold, she says. Let's have a look. So gold plummeted this week. Earlier, well, last week it was, wasn't it? And we've really gone sideways this week. There's Monday, Tuesday, Wednesday, Thursday, down yesterday into this key bottom end of the Bollinger Band, and the key 50-day moving average is being tested for the first time since this big leg up started here at the beginning of November. So that's a key level under the 20-day moving average, under half the Bollinger Band. So doesn't mean the trend is over, certainly. As I said, I think earlier in the week, on an end of day basis, there were two big down days, rejecting the 1950 channel we were in. We remember we talked about that a lot in the last week or so, but certainly the trend is over. We may consolidate at these levels, and obviously the 50-day moving average, bottom of the Bollinger Band, a key consolidation level. So 1850 key support now, 1900 the key level to break back over. As you can see, the 20-day moving average coming back there. So 1850 support, 1900 resistance, and then that 1920 level above that, another $20 above that, where the support was as we were consolidating a high. So gold has certainly rolled over. This week we've got some nice moves down. There's the 4-hour playing with the 200 period moving average, broke through it again today. The 1 hour, the zoom in, you can see the weekly decline. So this is last week. Here we are, Friday, Thursday, Wednesday, Tuesday, Monday. A big decline Friday, and we've consolidated really. So I'm trying to edge high this week, but there's the big range, that 1900 top, 1850 is the low. Obviously, it's a bit more compressed than that in between, but they're the big round numbers to be watching on gold. No doubt we'll come back to that later. Excuse me. Sam, good afternoon. Euro pound. Euro pound, another one that's been trekking lower all week from a big spike to testing the 90 level, 89.70. I think was a high last week. We got quite, there we are. There's a 89.70 level, and we've been trekking lower since Friday. So 1, 2, 3, 4, fifth day down from Friday's high last week. So we've been trading lower all week. The lows are getting lower, the highs are getting lower. So just stay on the trend. Hassan, don't look to try and catch this at the floor. 88.26 at the moment, but it's been conversely, the daily trend was up very significantly at the beginning of February. We've rolled over, so we've had consecutive 1, 2, 3, 4, 5 days. You can see that to the downside, 1, 2, 3, 5. So that's continuing to trek lower. The 4-hour broke into the underside of the Bollinger Band earlier this week, and it's again continued down. 4-hour may find some support down here. This candle is just forming. It will complete in 15 minutes, but interestingly, it's broken the key 200 period moving average, as it did a few times here, So it's perhaps a further decline is not wouldn't be that much of a surprise. Certainly 88 could be tested here on this, which takes it down to about here on the 4-hour time frame. But it's just trending lower. Again, if you don't, I don't know where your stop loss would be now. You want your stop loss about there now, 88.62. Two big down candles there, and see how this 4-hour plays out. Typically will provide some sort of support, 88.35. We've currently burst through it there on that current 4-hour, but there's still, even with 15 minutes to go, there's still not a great deal of time, but there's obviously some time to go on that. 1 hour remains very much short. This current candle, again with another one with 15 minutes to go, is stretching out. It's burst. We've had a strong move down today. We have now narrowing of the Bollinger Band, horizontal of the Bollinger Band. We've got this widening of the beak of the bird here. We've broken below yesterday's low. There's yesterday's low there to 88.37. So we're under that at the moment. So that resistance needs to be returned to if we're going to stop this trend lower. But we are, we've been outside of the Bollinger Band now. 1, 2, 3, our 4th hour. It can go on for a long time, obviously, but we've got this widening of the beak's mouth like we had here, and now we're at a return. So don't get too greedy, but it's certainly still trending lower. Look for a break back over this low from yesterday, 88.38, if it's going to return back up to test the 20-hour moving average, and then it would need to move back as high as 88.55. Hassan, I don't know what time frame you're trading, but certainly the daily, the 4-hour, and the 1-hour are certainly to the downside for euro pound. If you want some more lower time frames, let me know. We'll come back to that once we've been through everybody's initial request. Protus, good afternoon. But Mello, hello, good afternoon. Hope you're well. Emma, took you a while, but the two major indices in the US. We've had a look at the Dow and the S&P 500. So let's go back to the daily time frame. So here we are consolidating. As we've rallied, this is the Dow on the daily time frame. Remember, so consolidating again. As we said before, we can't get over this 34,100 level. We can't hold over it. So we've dipped down. Bit of a sideways action here on the Bollinger Band. The ranges are compressing. So here you can see we can't get over 34,100, but we hadn't wanted to break under this 33,500 level, but we are now testing after 2 down days. So we were down on Wednesday, a bigger day down yesterday. Markets lost, I think it was about, I think the Dow lost 0.75% yesterday, 0.75%. So it's still in that consolidation range, Emma. Not sure what it wants to do at the moment. It's ran higher. It's broken over the there's a 50-day and the 200-day cross, and that's typically quite positive. But it's really just meandered sideways since then. So that's that range we need to break over to go higher, the 34,100 to the 34,300 level. But we're edging lower. So yesterday, zoom this in. Yesterday we broke under the 20-day moving average for the first time in about 2 weeks. And so areas to watch today as we come to the end of the month is the lower leg of that Bollinger Band, but it's really, you can see it's sideways action. So 33,225 is really that floor. Below that is the 200. Lots of action. I can't really expect that today, but who knows? 32,350 is the 200-day moving average there on the Dow. So sideways action, a little directionless. But on the lower time frames, we'll obviously have a bit of rejection of this upper daily line there, you see, from earlier in the week. So if we go back to the 4-hour, you can see how we perked through it, and then we came down very aggressively here. Yesterday, it was only yesterday, wasn't it, on this big down candle here, under the 50 period moving average on the 4-hour, and then continue down. And there's the 4-hour support at the 200 period there at 33,600 where we are now. And again, that candle is completing in the next 5 minutes, so we can make a decision on that, see if this holds. It has held in recent times, so that could be a key level for 4-hour traders. The 1-hour trader is short from last night as it rejected this daily resistance here at 34,165, and we've just legged lower through the 200-hour, through the 50-hour, I should say, through the 200-hour. The 20 crossed under the 50. The 20 is about to cross, or the 50 is about to cross the 200. That's quite negative as well. The Bollinger Band have dipped down. Again, see how we were out there for 4 hours, and then we consolidate. Then we take another leg down. So we found some support currently before the market opens here at 33,550, 33,500 basically, 30 points short of 33,500. So that's the support today at the moment, but you can see it's still biased to the downside with 40 minutes before the cash market opens. And we're below yesterday's low, and we're below Wednesday's low. That's Wednesday's low, and below Tuesday's low. Not quite below. Not quite below Monday's low. We are indeed, aren't we? So, so this is a new. What's that? This is a new. How many days is that though? It's 1, 2, 3, 4, 5, 6, 7, 8. So a new 8-day low, 9-day low. Really, it takes us all the way back to February low. In fact, there we go, 31st of January there. So February low has been plotted there, and it's bounced off it a wee bit. So we may find some support there. We've had a strong hour at the moment, but that's our support. So having posted a new February low, 33,500, we bounced off that again, round number. But again, to break higher, you'd want to be back over this 20-hour moving average, 33,700, which was where we stalled as we came down yesterday and this morning. Okay, so but that's still negative. So we've looped there with the Bollinger Band. So big increase in volatility, expanding of the Bollinger Band, contraction as the volatility cooled down, and then expansion again here. And the first trigger was that was a big. See how we squeezed in there? The tops come in, the bottoms come up. There's a squeeze. We've rallied high for 3 hours, and then it's cooled as it couldn't get over that key daily resistance zone here on the 1 hour time frame. So big down candle here yesterday, and we just rallied down from there. As far as the S&P 500 is concerned, where's my 500? Here it is. This is 500 on the futures. Similar sort of pattern. There's that congestion. Key level for end of day basis is we rejected the key. There's 4150, but it's really, I should move that up. This level here, if we zoom that up, you can see that it's the 4175 level is the round number here that the daily candles these are now couldn't get over. So 1, 2, 3, 4, 5, 6 days. And even yesterday, we tested the 4175 area. Obviously, above that is 4,200, we said before. That's been rejected. We had a down day yesterday for the S&P of 0.88 of 1% to the downside. And we're down again today. Immediate support comes here at the 20-day moving average at 4,061.82. But this will be our third day down if indeed that continues. But that's support initially. 4,060. Obviously, below that is 4,050, a key line as well. Then the 50-day, which sits at 3,979, and the 200-day sits around this 3,950 level. But the other key level is that this blue line here, the 4,100 level, was also breached. Minor, just 20 points. 4,081 closed yesterday, but that was closed under yesterday as well. So this resistance at 4175 has held. We're back under 4100, and we're down currently today. Big support level being tested now at the 4,061 level. So again, lower time frames, much more clear. There's that 4175 being rejected. 4 hour cable, big down, having gone up and rejected it. Down has worked out. It's run right into the 50 hour. Then it legged down again, and then we've moved down 5, 6 candles after that, four candles after that for a 4 hour trader. And the 1 hour traders, there's our big 4175 level. Let me just put that at, say 4175. There's 4175, the round number. I like my round numbers. 4175 level. Didn't quite get to it, but again, another big down candle here, having breached the 50-hour moving average into the under half of the Bollinger Band, and down we go through the 200-hour. 4 or 5 hours outside of the Bollinger Band, consolidation, then another leg down, and then into this support that we saw before around about that 460 level is where we've bounced so far today, which coincides, we go back to the daily, coincides with the 20-day moving average. So we've bounced off the 20-day moving average today, but the trend remains to the downside. Emma and everybody else trading the S&P 500. Good afternoon, Mohammed. Hassan, sorry. Gold say had a bit of a shakeout yesterday. Sideways action most of the week. This is the 1 hour chart for the week, Hassan. I don't know what your time frames are. You can see, having legged down Thursday, Friday last week, we've sort of been sideways, but again, the highs are ticking higher, not really, and the lows have been ticking high up until yesterday. And then we shook out into close. So we couldn't get anywhere back to that 1900 level. 1890 was our high yesterday. We've moved lower side, and then we've drifted. Didn't get as low as the key 1850 level. We found support at 1860 on the gold market. Ran into this is the 1 hour time frame. Ran into the ran into the 20-day moving average, 20-hour moving average. That's held, but again, providing a bit of support. So here, intraday, as we start, there's a bit of a, you could put a bit of a, a weakish perhaps trend line there. So support going forward today is the 20-hour moving average at 1862.40. Immediate resistance is just above where we are at the moment, at top of the Bollinger Band at 1869.75, and the 50-hour moving average at 1872. So 1870, let's say 1870, let's make it a round number. 1870 is Friday, and 1872, that's the two resistance levels you're looking, if you're going to keep to get this gold chart moving up. Signal line is just sort of bottoming out here on the MACD as we've gone sideways for most of the day. But our low today was down there at 1852. The end of hour closed at 1854. So that's your big downside target, 1854. And the bottom of the Bollinger Bands are squeezing in now. So it looks like a bit of consolidation for gold today. But again, time will tell, having moved down quite nicely. Yesterday looks like we might be moving up as well, but we need to break that key level there, 1869 as I said, and 1871. So over 1870 is big pivot area for gold intraday, Mohammed. Mohammed, good afternoon, sir. Hope you're well. Certainly, always wash your hands. I should have washed my hair. I don't know about the state. You can see the state of my hair today. I should have washed that before I came on camera. Dollar CAD, what happened? Well, it was a strong, Canadian jobs number. If I show you if I bring in, where's my calendar gone? I lost my calendar. If I bring in the calendar again, Mohammed, you can see the big beat here across all the jobs points here on for the Canadian dollar. Big beat in actual change in employment. So 150,000 people found new jobs in Canada in January. It was last month. December was also upgraded from 105,000 to 112,000. But the big thing was it was a big beat. Expectations were very low at only 15,000. So it's a huge beat. A bit like, and well, in terms of expansion. Percentage-wise, it's even bigger than the blockbuster we had from non-farm payrolls last week. So on the northern half of North America, excluding Mexico, because they raised their rates surprisingly, or cut their rates surprisingly yesterday overnight. Lots of jobs being found by Canadians and Americans. So it's brought the unemployment rate down to 5%. It was expected to tick up or stay up 5%, I should say. But the participation rate is also tweaked up, and it was tweaked up. In fact, it was tweaked up significantly for December to 65.4% from 65%. So it's a strong number. Remember, we'd already had the Bank of Canada suggesting they're done with their rate hikes. So understandably, that weakened the Canadian dollar even further. So we had this is on the 15-minute chart since the news came out here at what am I talking about? It's this one here, wasn't it? At 15:30. So big down candle. I just wanted to show you the 5-minute chart as the news broke there at 3:30. So a huge move down there from the low of the day was breached, and we went all the way down. 33 went as low as 33.60. 133.60, and we sort of bounced off that in the moment, but it's a big bid for the Canadian dollar. So any CAD traders out there, they've done very well on the back of that, as you might expect, on the back of that Canadian jobs number. So that's the CAD on the 5-minute chart. Who is next? Marvelous TV is asking about check euro dollar. What the possibility of it going to close as a buy trend till 108? Okay, let's have a look on what you're trying to say, my friend. So there's let me just put that. Let's put some of these lines on correctly. There's 107. I don't think that is at 107, is it? No, it's not. Let's put 107 in. 07. Should check these workstations before I come and before I go live, shouldn't I? And your 108 is there, so that should be. Let me check. That's actually 108. It is okay. So close. So our two big round numbers. There's the 108 level, marvelous, and there's 107. So again, we zoom this in. This is on the 1 hour time frame. What we see this week, again, like we just had a look on the gold chart, is we've really been in a downtrend, but we've been consolidating, sliding sideways this week. Bollinger Bands flat and level, moving averages flat and level. See these 1 hour, this is the 50-hour moving average flat, so we've got no clear trend, although we did rally yesterday intraday above the 28, so that's a nice rally. Then it cooled back to these support levels, under it, and so we've gone low, but we've gone lower again today. So if we go to the 4 hour time frame, excuse me, I don't hear my phone taking off there, some WhatsApp message. So the 4 hour traders are under the 200 period moving average here, you can see. So we've been weak for most of the week as we saw that downtrend. So we tried to move up, but that's provided resistance. Only one candle above it, and then we came back down. So the 4 hour is continuing to trend low, and as you can see here, we're at the bottom end of this range. This 107, 108 range is what you're talking about, marvelous, but we're at the bottom of that range, so it's really pressured to the downside. Careful trying to rally this to 108 like we did earlier in the week, but at the moment, you know, we're we're dropped out the bottom of this range, the 107. Obviously, it's early days in the New York North America trading session, but what you want to be looking at is that low here from I think it was Monday, wasn't it? 7th. No, it's Tuesday, wasn't it? We went to 106.70 zone, so that could be the next downside target. If we're going to move up today, the euro needs to get gets back in the. I was going to say get back in the Bollinger Band. It is back in the Bollinger Band at the moment. But get back over that psychological 107 at the moment. We've been 3 hours under that key 107 level, so that's first resistance. And then on an intraday basis, if the leg is going to take us higher, we've got resistance from the down movement we had this morning at 107.18, and that also will coincide, as this is tracking lower, that will coincide with that 107.20, 107.18 level is where the 20-hour moving average is, and then above that, this might flatten out a wee bit more at 107.35 really for the 50. So 107.35, 107.20, the big round 107 itself are the three upside levels that euro needs to get back to today if it's going to start moving up. If it's going to continue to decline, you want to be targeting 106.70 range, which is that intra-hour move low we had on Wednesday. The hourly candles closed where we've already tested today on an intra-hour basis. You see that 106.81, bing, bing. That's a nice little tweezer low there potentially. But you know, I'd like to see that over 107. Certainly, 108 seems a long way away on an intraday basis for cable on a Friday, but you can never tell. The Michigan data is coming later, so watch that as well. Jesse, hello. Salam, my friend. Nawaz, hello. Seen you for a long time, my friend. How are you? Hope you're well. And how's your trading going? Let me know. Where's our stand? I have delayed, guys. I don't know what that means. You're obviously not talking to me, I don't think. Ivan, are you talking to me? Where's our stand? I have delayed, guys. I don't know what you mean. Jonathan, good afternoon. Is that it? Yeah, Jonathan, last comment here a couple of minutes ago. No, but interesting. Video on Facebook. Okay. I don't know what. I don't know if you're talking to me, Ivan, but anyway. So euro, continuing under that 107 level and moving, literally moving lower. I say next big data is these two speeches by these characters. See how they move the pound. Let's have a look at some of the other crosses. The big news of this morning, nobody's actually asked about, was this gossip, or not gossip, Shadrach, good afternoon, about the new potential Bank of Japan governor. So a couple of names in the frame, and this morning the current deputy governor, a guy called Mr. Amamanya, was very, very dovish in some of the comments he talked about. He talked about the yield control curve, not having to be tweaked with a gain, and also that the ultra loose monetary policy that the Bank of Japan have been on for many years now, since the 2009, 2008 financial meltdown, is still appropriate, was the word he used. And then there was a news story in the Nikkei newspaper, a very reputable news source as far as Japan was concerned, that well, initially it was that a guy called Ueda, U-E-D-A, Kuzu Ueda, somebody I'd never heard of, to be honest, was tipped to become the next governor. And that was deemed to be very less dovish than the very dovish current vice chair. But that downward movement for the yen, or upward movement for the yen, actually, the dollar yen obviously went down, but we went under 130. But overall, we've recovered half of the losses that we had in that news announcement. So it's still, as far as the day's concerned, dollar yen wise, is we're still biased to the downside, so we're still under that key 131 level as well. So big shock took us under 130. We're back to 130, or back to try and test 131, but it didn't happen. So it's still deemed a relatively less dovish. I'm going to say hawkish, but less dovish, perhaps, appointment. But as you can see, if we took out the daily, remember we went, it wasn't that long ago, we were all the way up here at 150 for dollar yen. A huge rally for the dollar into October, and then it's cooled since then. Some significant action from the Bank of Japan, although they never admit it, and we've moved down quite significantly. But anything over 100 or this 125 level is still a very strong. If we look, actually, we've got the weekly, see what I mean. This is still a strong dollar yen pair, isn't it? Where this is 2019, 2020, 2021, all the way down here, 105, 104, 110, and we've gone all the way to 150. So it was a huge rally for 2022 for dollar yen, and we've cooled quite significantly, well over 50% of that. Actually, let's have a quick fib check on that, how far that has actually cooled. Technically, yeah. So there we go. So there, we've tested that key 61 fib level and bounced off in the last few weeks as the dollar's come back a wee bit. But 133 is that 50% fib level of the 2022 rally, and even that was was a leg up from 2020, 2021. We interestingly, that's why that 133 level is. So hence the those key levels, and 128 was a low earlier this month as well. So yeah, dollar yen very much in play today on that. Who's going to be the new governor? We've also got pay announcements at the end of March as well. April is the new financial year, and Japan is also coming up to a key part of the year for yen traders and anybody trading Japanese stocks as well. Lots of yen gets repatriated for the end of the financial year. So yen still the major carry trade currency. So there we go. Jesse's asking what's happening next week. There's lots of GDP data, but top of the shop, as you suggested there, Jesse, is the CPI data out of the United States. I'll just show you the date calendar for next week. It's really dominated by this inflation data. So GDP from Japan. We've had that GDP data today from the UK, which keeps the UK just about out of recession, although it still looks very, very weak going forward. But it was a bit of a surprise. The underlying data was all very positive. I didn't think I'd hear myself saying that, but it was. Again, is it an outlier month, or is it was December perhaps the turning point, and things got ahead of themselves. So anyway, back to the inflation story. First up is New Zealand on Tuesday. Then we've got the US also later in the day on Tuesday. But before that, we've got the GDP numbers out of the Eurozone area. So can they follow their neighbours in the UK with better numbers? We'll see. But really, all eyes now on US inflation, 5.3% annualized. That's the number. The headline number many people will be looking at for Tuesday's US data. That's the key data point of the week. Retail sales from the UK. We also got inflation data from the UK as well, 10.2% again. Expected to cool from 10.5% last time. Still way over where the Bank of England wants to be. The other key number in the UK is this number here, the retail price index, because it's still relevant to a lot of the industrial action that's taken place in the UK as well, because lots of wage negotiations, wage settlements are done on the RPI index, which still stubbornly stays 2 or 3% above the CPI reading. Oh, that's a bit technical, but RPI is a broader measure of costs in the economy. Consumer, as you might expect, is just talking about the consumer side of things. So 10.2% from 10.5% for CPI and 12.2% from 13.4% for the RPI. Eye-watering. Remember, all central banks are looking for this 2 to 3% window for inflation. Bank of England certainly looking for 2%. They've talked very bullishly about it coming down very quickly this year. We'll see. Inflation can hang around. Jesse, I hope your week goes well as well, my friend. Retail sales as well on Wednesday out of the United States. Obviously, key part of the consumers, key part of the US economy. So see what that looks like on Wednesday. Thursday is jobs from Australia. We've obviously got the weekly initial claims, always on a Thursday out of the US. Oil revenues for oil traders Wednesdays and Tuesdays. But that's, it's higher than expected this week. Yesterday, 196,000 from 190,000 expected, but it's still historically very low. Anything under 200,000 is still very low. People claiming unemployment. So the jobs market still remains very hot in the United States. Remember that blockbuster number, 517,000, way above this time last week. Any expectations? Analysts, Wall Street was expecting the highest, I think, was about 305,000 on the surveys before non-farm payroll last week. But I've said all week, a big component of that was a big rise in hospitality and leisure jobs, which are traditionally quite relatively poorly paid compared to the broader market. But no disrespect to anybody working in hospitality or the leisure sector, but that was where the big sector of that 517,000 came from. I mean, there were other services sectors doing quite well. So stubbornly strong jobs in the US. Inflation headline, inflation cooling. We'll find more about that on Wednesday next week, and see what the jobs are like. The retail numbers are like later in the week. Philly Fed also on Thursday. It used to be quite important. It's less so, quite a volatile number. Not tends to move the market around. And then we finished the week with UK retail sales, European retail sales, and German retail sales as well. So it's retail sales. It's all about inflation sales. Obviously, all of this data is backward looking. It's already happened, but it's what the central bankers have priced in. I'm not sure how much. We've had a lot of central bank talk this week after the blackout for their meetings. So that's expected to continue next week as well into week 7 of 2023 and the third week of February next week. So that's next week, Jesse. That's answered your question. Plenty of things to look forward to. Remember, as intraday traders as well, you really need to have those key economic events right next to you. So and obviously you can't predict as an intraday trader, the shock we had here for the yen today, that Nikkei news announcement or scoop, as they like, I suppose they still call it these days, of the a shock candidate for the governorship of the Bank of Japan. So there we go. Anyway, Jesse, you have a great weekend as well, and stay safe, my friend. Sterling cable continues to surprise, to be honest. We had this rally this week from the lows on Tuesday down here under 120. As I say all the time, 120 for cable, this 120 level is, it's a big psychological fundamental level. If we go up to the weekly chart, you can see how many times we come back to 120. Many times. Last time we were there was back in last time we went right down there, and to test was the crisis as the pandemic was beginning to strike. And we bounced off that. Obviously, we had this move all the way down to 104 for cable as Mr. Kwarteng took over the chancellorship. But sterling has recovered significantly from there, but it can't get over the key, or what was, we didn't get to the next level, which is 125. We're struggling, or we'd struggled in the January rally and even at the beginning of February to actually get over the beginning of the year. This is it's the end of the year, isn't it? Sorry, so December, to get over 124. So 124 is the big next line in the sand. We had a big down week last week, and that's followed through. Sorry, let me zoom in. That's followed through this week. So we've been there we go, down last week. Sorry, that's February. There we are. On a daily basis, and we sort of recovered again from the test of the 120 earlier in the week. So Tuesday we went under it. We've been up Wednesday, Thursday. Next resistance is 122 now. That's where the 50-day moving average, and then above that is the 20-day moving average, midline, the Bollinger Band. So we're out of sync for sterling. So is the 20 going to come down and break the 50? We're going to move lower and test the 200-day moving average, which tests below that key 120 level at 119.45. Again, too early to tell. We've had an up leg. We've consolidated up here. Couldn't get over 124. We've rejected 124 for February, but we don't want to go under 120 either. So there's a big 400 pip range there on sterling. First target is halfway up there at 122, 200 pips to the upside. Gertrude, good morning, good afternoon. I don't know where you're coming from. Anything you want to talk about, Gertrude? Let me know. I'm just running through the major currencies at the moment. We've run out of, there's usually lots of people asking about gold, but Jesse was asking about the calendar for next week. So that's sterling. CAD we've had a look at because of the Canadian big positive jobs outlook. The Australian dollar holding .69.50 in fact, but again another one a bit like sterling yesterday, ran to its 200-hour moving average and then reversed quite significantly. Nice tweeze at top as it burst over the 200-hour moving average down into close yesterday, 69.40. And then really consolidated yesterday. Australians all on their long on their weekend now. So going forward, it's sort of ticked up in the last couple of hours. So we've breached our 20-hour at 69.32. The 50-hour sits at 69.45, which is exactly where we are now. So if that holds, next target will be 69.52. And then if that holds, we're getting to the 200-hour at 69.90, and then yesterday's high is the line in the sun. The next resistance at 70.09, so 70, big round number. Couldn't hold it yesterday. Will we get back to it today? Who knows? But it's not looking that way currently. But say it's early days in the US trading day at the moment. Market's about to open in the US. In 10 minutes. So, Gertrude, good afternoon. Hello. Let me know if you want to have a look at anything. Oil, nobody's asked about oil, but oil's, again, another one that's sort of biased higher, and then it's ran out of steam. So we rallied up here to $82 to close out January. We spiked down under $72 here last week. and then we've recovered this week. So we're currently right smack bang at the 20-day moving average. That Bollinger Band is completely flat. The 20-day moving average 78.70. It's exactly where we trade now. $80. Interesting, it's been spiked to today. What caused that? I didn't know we'd gone over $80 today. That big up candle there. When was that? That was 12.100. That was about the Russian output news, wasn't it? So we didn't rally to $80. So 77.50 support today. $80 has been rejected as too high too quickly, and we've come back down. So next technical support intraday there sits at 78.20. So 78.20 as we go forward on the oil price. And gold price, that was from earlier. Somebody was asking about gold earlier. This is the hourly chart again. Big. We couldn't get to 1900 yesterday. We got as high as 1890. 1890. Tweezer top in there as we'd been sort of, again, if I zoom this in, sorry, zoom in, not out. Sort of a general sideways action all week. It doesn't look too exciting now, does it, when you look at it on an hourly chart there, zoomed in, like from the big move down we had Thursday, Friday last week. So consolidating, but sort of generally sort of eyeing, higher highs. We did. It's not really a trend, but we did. Wednesday's close was higher than Tuesday's, and the high for Tuesday was higher than Monday. So we have been moving higher all week, although each time we've got to it, it's moved back down again. But the lows have supported that as well. So the lows have got higher all week as well until the close of yesterday. So it looked quite good yesterday until yesterday afternoon, where we shook out quite aggressively, broke that gentle uptrend we'd had all week, tested all the way down this morning to 1850. 1850 zone before we bounced off 1850. So going forward today, all you gold traders, you're trading the US session. Whoops. So look. Why is that gone funny? Why does that look so horrible? There we are. That's better. There we are. It's a bit more intense. So there's our 1850 level. There's 1850 itself. We were just a bit above that 1852. We've rallied, retraced, but sort of rallying again. As I said earlier, we're now a tad closer to that next resistance, the top of the Bollinger Band through there at 1870. The 50-hour is just above that at 1872 as our next upside targets. If this gold market's going to continue, that's our little trend line for today. We need to support the signal line here on the MACD is starting to turn up, still under zero. Are we going to break it? We'll see. But nice move down yesterday. For gold traders, Euro Max. What's Euro Max? What's Euro Max? Have we spelled a mistake there? Doing Euro Mexican? I don't know. Something what Euro Max, my friend. So that's gold, and let's have a look at the stock futures because they were lower earlier. Let's look at NASDAQ. Certainly NASDAQ here. I'm not sure if that's a futures. Is that still live or is that from? That's the daily, isn't it? Oh, yep, that's still futures. So we have got some live prices. So again, a week close. The NASDAQ was down. The weakest. Again, the NASDAQ is the biggest mover of the major three indexes typically in the US. We were down over 1% again yesterday. Certainly into close, into the week. So this is the opening hours of. Oops. I've just had a Windows error. I don't know if you can still. Hopefully you can still hear me. So yeah, I mean, we opened lower and just tracked lower all day into the 200-hour to close the day out, and then we breached that this morning, and we continue to consolidate in the Asian session. Then as halfway through this morning, and the European session get going 9 o'clock, 8 till 9 London time, the futures went lower again and down to test here on the NASDAQ 100. If we just zoom this in, you see we've got sort of testing not only weekly lows, but this low here this morning, ahead of open, took us to, so it's 1, 2, 3, 4, 5, 6-day low, the last big rally we had. So again, another one whose highs are getting lower and lows are getting lower. So see how we close the week out thus far. For the NASDAQ, but again, signal line flat, but under the zero line quite significantly. So NASDAQ today, as the markets open in the next 5 minutes, the futures needs to breach the NAS1, or this is the USA 100. 12,345 is the first resistance to the upside. Support is really the bottom of the Bollinger Band, and this daily low we've printed here at 12,240. So that's immediate support. And as you can see here on an intraday basis, there's a lot of fresh air below that on this big spike up we had 6 or 7 days ago. So the next congestion area takes us back to the beginning of the month. So our monthly low for February was down here testing the key psychological 12,000 level. So although we're 300 points above that, we can't rule that out as this trend continues to sort of unwind. So 12,200 first, and then that 12,000 level from the beginning of the month to the downside for the NASDAQ. Okay, so if there's no more requests, I'll call it a wrap. Let me just leave you with Bitcoin on the daily chart here. Interestingly, the exchanges had triggered a golden cross on the Bitcoin chart here on the daily time frame. This is the 200-day moving average, and this one here, the blue line, is the 50-day moving average here. So some of the cash exchanges had seen higher volatility rates, and we'd seen this 50-period moving average crossing the 200-day moving average. That's the golden cross. And historically, when that happens, we've seen some very strong rallies in the Bitcoin price. Obviously, Bitcoin cryptos are much more volatile and lots of assets, so it attracts lots of people to it's very volatility attracts many traders, both experienced and inexperienced. But this technically is quite a significant event. That happened earlier in the week on the exchange before we had that big shakeout yesterday where we lost 5%, but it wasn't that unusual as far as Bitcoin's concerned. See, the candle itself doesn't look that outstanding, that much of a surprise. We get these sort of moves, don't we? And remember, we've had a very, very strong January as we legged up over particularly over the weekend trading. You see on our chart here, we see the gaps over the weekend. So 2 weekends, we had some significant gains for Bitcoin. So we gapped higher, but we ran to this 23,600 level as we ran into the end of January, beginning of February. We didn't break over. See, the intraday stuff was over that 23,600 level. We couldn't break over it. So here, as it stands now on our charts here, we had a big down day yesterday. We went into the under half of the Bollinger Band, certainly. However, the 20 to 200 day is still supporting it. So here on this chart, you'd want to break 21,250 and then 20,700 and then the 50 day here. So is this, if we extend this, if this continues to sort of move down like that, if we project into the future, which is always a bad thing, if we move that forward or zoom in a bit, you can see, that it's sort of crossing around the 20,000 level. If this then becomes that big support, see that continues to trek lower, this continues to trek up. The cross will happen here, still a few days away according to this. Indeed, if this happens, obviously the big down day we had yesterday is going to flatten out, certainly the 50. So the 50 will perhaps move down a wee bit here. It's not going to have that much of an effect on the 200, but so it's going to put the cross on this particular setup much further away. So Bitcoin to go high, it needs to break that 23,600 level, and more importantly, the 22,500 level where that 20-day moving averages. Will these gaps here be tested? 20,000, big line in the sand. But obviously, we'd been zoom in here. we'd been rolling through 19,000 before we broke up to the upside, and 20,000 is going all the way back during 2022 was a bit of a pivot area. So we were in as the winter of big cryptos rolled on through 2022. So strong recovery in January. We cooled a wee bit so far in February. They're the levels to the upside we need to watch. But it's yesterday's down candle. Going to see some more selling. So far today, it's fairly benign, and we've sort of sliding here on the 1 hour chart. We sort of slid sideways after this big leg move down. So consolidating really at lows around this 21,800 level. Okay, so there's no more requests. Sorry, my friend, I'm Euromax. I don't know. Euromax, MAX? Unless you mean Euromex. I don't know what you mean, my friend. Excuse my ignorance. Anyway, take care, everyone. I'm going to wrap it up. I've been here an hour now, so no. It's Euromax. No, I don't. Euromax company? I don't think so. Oh, it's not. Oh, somebody's saying that. Somebody's telling me here, whispering in my ear, that Euromex is the company. So let me have a look. I don't think it was. Let me have a look. Let me just check. Actually, it's we've run over open, so we see how the markets are opening. I can't see. Let's do that in. No, I don't think it was Euromix. Equifax. No. Oh, I guess you might have meant Euromex. Did you mean? Did John? You might have meant Euromex. Anyway, that's my that's a stock chart. It's looking a bit messy. Let's go back to our live profiles. Where is it? It's there. Okay, so if there's no more requests for any assets, I'll wrap it up. All right, Euro Mexico. All right, okay. Monica's asking about Euro. There we go. That's there we go. Always. Let me see if I can find my. If I've got this on here, I might not have Euro mix. I have got my EM currencies are here. I've got the Mexican against the dollar here, Euro mix, dollar mix, I should say, tracking low. Let me see if I can find the. I don't know if I've got the Euro mix. Just bear with me a second. I don't think I've got it on this platform, I'm afraid, Legion. I'm afraid, I apologise. But I will. I don't know if you want to leave. I obviously don't want to leave your email address here, but let me see about that. No, it's not on this platform. 75 platform. Sorry about that, my friend. I hope that doesn't put you off. Monica's asking about the euro. Coming to the euro, and Damon's asking about gold. Generally, I mean, here against the dollar, the Mexican peso, we had that announcement this morning. So I've got the daily trend. We've been edging lower. This is going all the way back to last year where we went to 21. We held at 20 during the summer. Then we legged lower to test 19 as the year came to an end. December bounce much lower against the Mexican peso. Came back quite strongly against the dollar here in January. Obviously, we didn't get as low as 18, but we went to 18.75. In fact, it was lower than that, wasn't it? 18.50 was. Sorry, that's black now. Sorry, I'll change them. 18.50 was tested, and then for January, so that's our 2023 low. You can see it was still sort of trending lower. So dollar came back at the beginning of February, and then we've had this announcement today, and we've rolled over. Couldn't hold 19, so tracking lower again. So 18.57 is that low from the beginning of the month, and our January low, our 2023 low. So certainly the Mexican peso has come back somewhat, but I'm sorry I haven't got Euro Mex on here. I should have realised that was Mex. Lejon, sorry, my friend. Monica's asking about the euro again. So where's my? Let's go back to the euro dollar. Here we go back to the white charts. Oh, actually, we've got the black charts on those. I've got to stick with the black charts. Different, more stuff on here. So euro, as I say, as we said earlier, there's 108 here, the blue line. The big thick yellow line here, Monica, is 107, and we've been edging under that today. The low for the euro this week was down here up to 106.70. The next dotted yellow line is 106.50. So again, I don't know what time frame you're trading this, but the big gap. So we rallied yesterday towards the 200-hour moving average quite significantly. So we broke high here, rallied up, turned around, stopped out, went short here, down, got stopped out there as it's rallied, but then that's shook out this morning after the surprise from the Bank of Japan, and we continued lower. So we went to test 107, bounced off 107, then broke 107. Now we're back to test it again. So 107, the key level to look for as we go forward. The low, as I say, of the week was here, 106.68. We didn't get that low in the last hour or so, but we're still trending low. So this chart is still short from this big leg down there from that one there. That was a flat trade. That's in the money, that one, and still biased to the downside. Monica, Lejon, thank you. That's very kind. I do come back. I'll make sure it's on here next time if that's the pair that you trade. The euro peso, euro Mexican peso. Thanks for that, my friend. Appreciate that. Where was I? I was with Monica and the euro. So yeah, it's continuing to track lower today. As you can see, that's the week low, 106.68. So are we going to get there today? Who knows? But certainly here on the hourly chart, the signal line breached zero line here on the MACD. It's continued to move lower. We've bounced up in the previous hour. The new hour that's halfway through now, trying to take us up, but certainly we need to break 107. And then the 21 EMA on this one, that's the magenta line here, is at 107.18, like we saw on the Bollinger Band. 107.18, 107.20 is where the 20-hour moving average is midline. Ali, good afternoon. Fred's asking about the dollar. This is the euro dollar. If we look at the dollar index itself, got a bit of oomph today from the, I certainly got a bit of movement earlier on from that surprise announcement out of news gossip out of Japan. It's since recovered that, and 103 has been held. If we zoom in, there's the blue line, that's the 103. We've sort of been pivoting around that, haven't we, all week from the rally up we had at the beginning of the of last week, where we went when we spiked to earlier in the week there to 103.80 there on Tuesday, and then we've been moving lower. So down Wednesday, down Thursday, and we've turned around so far Friday. So a bit of a channel-based finding support. 108, although it was a big breach yesterday. So 103. Our low for dollar index this week was yesterday, as the lows were getting lower. It wasn't really trending, was it? 102.50, which that brings in that 200-hour moving average as well. So 200-hour 102.50, 103 has been pivotal this week and continues to be, and our high today has been 103.43 to the upside. So we're sort of ticking higher at the moment, but that's your line in the sand. There's your support. There's your support there. First support at 103.13, second support 103.08, and then the round number 103, 8 pips lower than that that way. Ali, hello. I was just about to wrap up. I've been here an hour, but as you're on Facebook, and there's not many other people here on Facebook, I'll certainly have a look at gold for you. So a relatively volatile week, big down day yesterday. as you can see, there we are. It's a different chart than the one we were using before. But as you can see, generally this week we've been sideways, but as it was sort of angling, we were angling higher. So our up, our up, these blue lines, our blue zigzags were, it's a bit exaggerated now, isn't it? Our blue zigzags were generally to the upside. So we topped out yesterday up here at 1880 before we turned around, 1890 before we turned around really aggressively, didn't we, yesterday? So big down candle here at 4 o'clock yesterday, 4 till 5, and then we tanked into close very, very aggressively. So we couldn't hold 1890. We couldn't hold another key level, which we talked about a lot last year, was 1880. But we turned around, and again, another one of those trades that just follow the rules. We'd been long here. It shook us out very aggressively. Well, wiped out a lot of the profits we'd been long on that one. But certainly took a lot of movement down there into a key support area, 1860. Looked like it was going to hold. And then this morning it legged lower again to test. We didn't get to 1850, but it's within a smidge of that area. So it was a huge move yesterday from 1890 highs to 1852 lows this morning. It's bounced off that quite aggressively like it did when we were moving down. But it doesn't. But since then, it's sort of cooled, hasn't it? It's run out of its energies, ran to 1870, a big 3-4 hour recovery, and then it's consolidated sideways since that bounce up and bounce down. So support today going forward from here sits at 1860. Obviously, don't rule out the low so far today, but it looks like it may already be in at 1852. Below that is a big round 1850. We get some surprises out of US. This is the hourly time frame, Ali. I don't know what time frame you're interested in. Tell me if you're more interested in shorter time frames. Let me know. But certainly today, if you're just looking at today's trades, today's low is 1852.70. Today's high currently is 1871.92. Call it 1872, which is where the 50-hour moving average is, and we're sort of been sideways since the big leg down yesterday and this morning, and the bounce this afternoon to the upside. So generally sideways since then. So I don't know. I don't know what time frame you're interested, but this is the hourly time frame. So that's the big support, 1860. Don't rule out 1850, but 1852 also has to be tested first, and that's our current low of the day. 1870 is providing some psychological resistance as a round number, but it's also the 50-hour moving average is coming in, 50-hour moving average is coming in to see that. That's that blue line. Oops, let me do that. And then it's 1880, that end of day key support area had been in. The 200-hour moving average for completeness is up there at 1888. Whether we get there today or not, I don't know. So a bit of sideways action on gold. Ali, thank you very much, my friend. And I am now going to wrap up unless somebody else just asks for something new. Okay, so I'll give you a couple of minutes. Leave you with that sideways action on the 1 hour time frame for gold there on the 1 hour. If we go down the time frame, the 15-minute will be a bit more chopped. There we go. Even on the 15-minute, it's been consolidating a while. There's that 1870 resistance on the 15-minute, where the 200-hour, 15-minute, 200 period, 15-minute chart is as well. On the 50, there we go. That nice range there. 50 period moving average on the 15-minute is the support, and 15-minute traders, the 200 period moving average is resistance. Ali is saying, what is your strategy for trading? I'm a trend following sort of guy, Ali. So trends can go on and on and on. I cut my teeth on stocks on an end of day basis, so I don't know how much experience you've got, but watch my webinars, come to our seminars, watch our webinars. This business, as I say all the time, I'll finish with this to you. People get fed up with me hearing me saying this, but it's nevertheless, it's a truism. Markets are really, this business is a psychological business, so you've got to get your head right first and trade the time frame and the asset that suits you, suits your lifestyle, and understand, about losing, because lots of trades are losing trades. It's managing that fear and greed. There's lots of techniques to do that. Try and improve your patience, improve your discipline, but understand the basics. And certainly when you're trading CFDs, you've got to be very careful of the leverage, margins on particular assets, spreads on particular assets as well. So anyway, let me leave you that for the weekend. So best of luck, Ali, and everybody else. Let me just leave you with the... let me get rid of me. There we are. Let me leave you with that gold chart that's going sideways. Euro also going sideways, but below 107. So we need to get back over 107. That's trending lower at the moment. Euro. So take care, everyone. We'll see you all again next week. Have a safe weekend. And as I say, we'll see you all next week. US CPI is the top of the shop tomorrow, next week. Lots of other data supporting that, retail prices, CPI from other countries as well. But certainly the focus of the markets next week will be that CPI print. Is it going to continue to come down? Headline. Everybody's expecting it will. Will it come down in the UK as well? Everyone's expecting it will. Let's see what happens. Okay. Ali, thank you for your kind comments. I say go to our website. Let me just that's our calendar. But I say go to our website, and our webinars are our teaching materials. It's on there. Oh, there we are. Under education here. So there's lots of videos. There's an e-course you can follow. Our webinars, our next webinars, they're in English. They're 3 times a week. We've got them in other languages, obviously. I don't know what your native language is, my friend. You're awaiting the next class, or where you are. Okay. Well, price action with Andrea on Tuesday and live analysis with me. A bit like this, well, very much like this, with me on Wednesday. So do join us, my friend. Okay. So take care, everyone. Have a nice weekend. And we'll see you when we see you. Okay. Be good. That's my, there we go. All right. So take care and all the best, everyone. Bye-bye.